Anthony, I'm curious what you think could possibly come out of tomorrow's session and what you're looking for.
Well, I think the principal focus, good morning, Andrew. I think the principal focus is going to be on the order flow payments and the discussion between what happens with Robinhood and places like Citadel. I don't think the focus is necessarily going to be on the hedge funds. The hedge funds really didn't do anything wrong. They got short stocks, which they're totally allowed to do. They were short in concentration, which got picked up by the Reddit people and exploited at least temporarily by the Reddit people. But I don't see this being a target practice on hedge funds tomorrow as much as it is the little guy getting squeezed here, or is the little guy being hurt? And I think that what regulators already know is that the laws in place are actually to protect the system more so than the individual investor. And it's not really clear, Andrew, how you could do more to protect the individual investor. This is sort of a caveat emptor situation.
Anthony, here's a real question. And I think underneath all of this is the game rigged? Is it a fair fight? If I'm sitting in my pajamas with my laptop or on Robinhood on my phone, do I have a real chance against the pro who has access to data and resources and frankly is doing this professionally? I mean, some people have compared this to, the professional golfer versus the weekend duffer. Does the duffer really have a chance against the professional?
Well, listen, we both know that the professional has an edge if you just think about the size and scale of things. But never before in history, Andrew, has the individual investor come this close to parity. And if you just step back for a second, the individual investor has the same capabilities as a prop trader at any of the legendary firms circa 1995 or 2000. They have costless trades and they have near perfect instantaneous information. And that's exactly what people had, 20 or so years ago. But I don't believe that they have an edge, and I don't believe that they're ever going to get to parity. I think the question is, should they ever get to parity? And the answer is, well, how can they? If you're staffing with 150 traders and you've got $20 billion of capital under management, of course it's going to be there's going to be an edge there. I think what you want to make sure of is that they're not being disadvantaged by the system, whether it's the frequency trading, the high frequency trading, or it's the payment for order flow that could tip people off directionally. So that's the issue.
Okay, so let's take on the payment for order flow issue because it's an interesting one. I know it's technical for some folks, but effectively the argument is that the economics of Robinhood are being paid for by Citadel because they're paying for the order flow. And there is a view that Citadel wouldn't be, quote unquote, paying for that order flow if it wasn't somehow meaningful to them, right?
Well, yeah, listen, no question. Of course, they're paying for that order flow because they want to do those transactions and they want to see the momentum of where things are going in the market. But, listen, again, Robinhood is fully disclosing all of that to their investors. If you log onto their account, you look through the fine print, they're explaining to you why your transactions are costless. People should know that. That's the age-old thing on the internet. If the service is for free, you happen to be the product as opposed to anything else. And I think people understand that. And so remember, Robinhood's also making money off the float. And so when there are margin accounts at Robinhood, that's also very lucrative for Robinhood.
Shepard Smith here. Thanks for watching CNBC on YouTube.